Good afternoon. Welcome to our weekly livestock recap. I'm Brownfield news anchor and reporter Meghan Grebner. With us is University of Missouri livestock specialist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Let's talk a little bit, kind of recap this week, maybe touch on some of the highs and lows in the beef and pork and the livestock markets that we've seen this week.
Yeah, so maybe it's a little bit of better news for a change, especially on the cattle side. You know, when you look at where we've been on futures this week, live cattle maybe up about $5 relative to where we started the week as we moved through this week. Much better news after what was a pretty tough week the previous week. Feeder cattle up as well on the exchange, as well as we're actually starting to see some higher bids for feeder cattle. I think we started the week up about $2 on feeder cattle prices and have been up really sharply here towards the end of the week. We are seeing some heavier calves still coming to the market as a result of coming off a wheat pasture. But some good news there, and I will keep saying on the hog side, higher hog prices, another $2 or so, 100 on live hog prices for this week is nothing but good news. We keep seeing the pork cutout value going higher as we look at that cutout. On the beef side, we've still seen the negative side of some lower beef cutouts. You know, this week the choice beef cutout was the largest decline. I think we'd have to go back into the fall of 2015 to see a larger weekly decline than what we saw in this last week. I hope that allows us to continue to move a lot of beef products as we look ahead and get more less expensive products in front of consumers as we look ahead.
When we see those lower prices, is that maybe a consolation prize, knowing that we're able to move a little bit more product, or hopefully move a little bit more product and keep that feeding that domestic demand?
Yeah, well, so we certainly know we could move more product when we get lower prices, and given that when you look at beef production, you know, we're up nearly 3% to date this year relative to a year ago. We've got to move that 3% more beef production, and it's going to happen in U.S. markets. So giving us some lower prices ultimately to consumers, I do think is helpful for the amount of beef that we have coming to the market today.
Talked a little bit about being up from last week. Are we hopeful, maybe that's a better term and a better phrase to use, that last week and we've hit maybe a short-term bottom in the beef market?
Yeah, so perhaps we are getting somewhere near a bottom, at least here in the short term. You know, I want to make certain that I remind everyone that a short-term bottom doesn't mean that I don't think there isn't some longer-term weakness still available in perhaps both beef and pork markets as we move ahead. Again, as we get more supplies of those meats in the marketplace and a little drag from the export side, I continue to see lower prices as we look ahead in the medium term, but maybe a nice short-term rally in cattle prices. I don't think we want to overemphasize where that goes, however.
Let's talk a little bit about first quarter. You mentioned exports. We're headed into May. Any thoughts on the exports for the first quarter and maybe what we glean from that?
Yeah, so I think a little bit of good news. When you look at pork exports for the first quarter of 16 relative to 15, up nearly 60 million pounds. Every pound we can export means we don't have to consume it in this country. Beef up slightly, a little less than 10 million pounds. The one that's really been troublesome, I guess, when you look at total meat supplies, chicken exports have actually been down nearly 60 million pounds so far in 2016. So we will watch there. Beef imports, some more good news for us. So less product coming from Australia and New Zealand. We're down a little over 80 million pounds in terms of beef imports relative to a year ago. So some good news, and I think we continue to see interest in pork markets from places like Japan and China. The U.S. may not be picking up a lot of the additional trade going into Japan, but all in all, I see some positives generally in Asia from what's happening on the pork front.
Scott, you mentioned poultry exports being down. Does a lot of that have to do with the outbreaks of avian influenza that we have seen throughout the country in the last year?
Well, I think to an extent that's part of the issue. I also think you have some trade issues, especially in places like Russia, that continue to to be difficult for us, but it does remind us, I think, to be very careful about what can happen to these markets in the outbreak of some other disease, whether it's more avian influenza. I know we got a report of some low-path AI occurring here in Missouri. I don't expect that to be a big market mover, but a big outbreak of AI certainly is troubling in terms of export markets turning down. You don't want to talk about it, but a big outbreak of something like FMD in this country would certainly be, I think, devastating to prices. So I don't think it's a matter of if we have a disease outbreak, it's a matter of when, and trying to guess the severity is pretty difficult in advance, but something that is certainly a risk that producers need to be paying attention to as they look in the marketplace.
What are the best? We talk about protecting ourselves in the grain side of things on row crops, corn, soybeans with the futures markets. What are the best ways for livestock producers to mitigate risk, price risk for them, and is it similar?
Yeah, so I think in many ways it is very similar, Megan. I always like to start by saying, before producers should think about price risk management, they need to know what their production cost really is. If they don't know what they're trying to protect from a cost standpoint, I think it's difficult to know what level of prices should I be protecting against. And yet I think we have a lot in the livestock industry that it's difficult to get that pencil to paper and really figure out what that production cost is. For those that are larger producers, certainly you have straight options of going in the futures market or using futures options to try to protect risk. USDA through the RMA provides us some LRP, livestock revenue protection products as well. Those tend to be, I think, more helpful for smaller producers who can't handle a full-size futures contract. But not doing anything, I say all the time, is a price risk management strategy. It might not be the best one. So I do hope that producers are thinking very carefully as we look ahead, because we've come off of record prices, and I think livestock prices generally are going to move lower, and many have been expanding in the face of these record prices, and I hope they're not planning on those record prices returning anytime soon, and do think about some risk management. I will say those that might have bought some calves to background them for a few months, those have been some pretty risky propositions of late, given cattle markets have been moving lower. Doing things to protect that price risk is certainly important.
Let's talk a little bit about commodity prices. Soybeans hit a record high on Monday, again in 12 months, 13 months, something like that. Corn followed, but things have backed off a little bit this week. Where does that come into play for our livestock producers as well, and how do they continue to manage the volatility that we're seeing in the commodity prices?
Well, I think you hit the nail on the head. It's volatility, and it's not over. I think we've got a lot of crop in the ground at this point, but we're a long ways from getting that crop in the bin. Dry weather will certainly give us volatility. I think dry weather in South America has given us a lot of volatility and been responsible for what we've seen in soybean markets of the last several days. So it is difficult. I will just emphasize, not doing anything to protect against volatility may not be a great strategy on some producers' part, especially if they can't handle a lot of that volatility risk. I will say we have come through what is a phenomenal period of time in agriculture when you look at the record high prices that we've had. And I will all the time tell folks that I think it's time to hit the reset button. If you're planning for those kinds of record prices, I don't really see them in the cards unless some really interesting events unfold again. And I say that if we have a drought as severe as we did in 2011 and 2012 in cow-calf region, could we get some record cattle prices? Absolutely we could. But I think that was a very interesting set of events that unfolded that got us there, and we do have to reset our expectations as we look ahead for prices.
Scott, not a lot of reports this week on the livestock side of things for us to talk about, but next week we have a couple of insights that will be coming out. Let's talk a little bit about those and maybe some thoughts ahead of the reports next week.
Yeah, so I think number one, we're going to get USDA to release May WASDE, which will give us the first look at full supply and utilization tables for the 2016-2017 crop. And so it's going to be interesting to see what they say about plantings of corn, harvest of corn. What do they see for trend yields? Same on soybeans. I think both of those will be very interesting. And ultimately, what do they see for a season average price for those commodities? If we end up with a 14 billion bushel corn crop in the bin come this fall, you know, what's USDA say about prices for 16-17? On the livestock side, we'll also get some 2017 estimates out as well. I think it's our first real look from USDA and where they see markets longer term out of that WASDE report. So I think that's going to be an interesting one as we look ahead. And again, could suggest some volatility if USDA gives us some surprises out of that May WASDE report that we'll get this next week.
Scott, good to see you. Hope everything is doing well in Missouri, which continues to lead the country in corn planting percentage. We're lagging over here in the Eastern Corn Belt, so more power to you guys.
It's been a very good spring, and you can continue to give us the good weather here for a while if you'd like, Megan.
I don't think my farmers over here would enjoy that too much. Scott, we'll catch up with you next Friday.
Very good, Megan. Thanks.
Thank you. I'm Meghan Grebner for Brownfield.